Welcome, dear traders. You are watching a recap of the Asian session. Japanese stocks dropped to a 7-week low in the morning. China's stock market saw a big sell-off as well. Equities in Australia and in New Zealand nosedived following a slump on Wall Street. What exactly undermined sentiment in the stock markets? How did it impact the main currencies? So let's discuss it. Asian stock markets tumbled due to the continuing turmoil in the banking sector after the collapse of a 3 US banks. Credit Suisse faced the same fate. Only a symbol of Swiss reliability, it was unable to weather the storm. Its shares plunged by 31% yesterday. Stock trading over several European banks was stopped, so jitters about the stability of the global financial system rose again. However, this time they have intensified significantly. The reason for the demise of the banks is not associated only with the poor management. To mitigate the coronavirus crisis, central banks pumped markets with liquidity. However, when inflation started to accelerate, they began to raise rates. Even the most reputable banks failed to adapt to such rapidly changing conditions. In many countries, including the United States, banks are required to buy a certain share of the government bonds. They usually depreciate when the regulator hikes the key rate. Banks lose their own investments. In the case of a lack of liquidity, they begin to sell them, facing big losses. That's why the US government intervened quickly following the collapse of a Silvergate Bank, Signature, and the Silicon Valley Bank. The Treasury Department and the Fed acted promptly to calm down depositors and prevent other bank runs. And many banks may not be able to stay afloat due to the liquidity crisis. The Fed is well aware of the dangers a further hawkish policy may inflict. That's why some traders believe that the regulator could take a pause. Other central banks may switch to a less aggressive approach to avoid a severe recession. The Fed funds futures are changing drastically. Yesterday, markets priced in only an 18% chance that the Fed would not raise the rate on March 21 and 22, and today, as the FedWatch tool shows, the figure has already exceeded 30%, whereas in the banking sector adversely affected forex as well. Given the growing uncertainty, investors have to choose from unfavorable options. The US dollar has always been a safe haven asset, yet its reputation as a strong currency has been somewhat shattered by the crisis of several banks, including Silicon Valley Bank. This is the 40th largest bank in the country. Recession risks are still acute in the United States. Will central banks be able to stick to a hawkish stance? Now almost all regulators are caught between a rock and a hard place. Inflation is still high and the rates need to be raised to curb it. However, further tightening could lead to new bank runs and an economic downturn. Naturally, the US dollar looks stronger amid a resilient economy compared to its rivals. Nevertheless, it failed to climb. In the Asian session, it was moving in the downward range of 104.30 and 104.70. It remained rather volatile. Amid the lack of liquidity in the United States banking and financial sectors, demand for the US dollar is falling and government bonds tumbled too. The yen is taking advantage of this situation. It's trying really hard to restore its status as a safe haven currency. Japanese businesses abroad are likely to get rid of the greenback, the euro and the pound sterling and keep their profit in the national currency. And there are 2 weeks left until the end of the fiscal year, and during this time capital inflows in the yen are sure to increase significantly. The yen may maintain a bullish bias until the Fed's rate decision on March 22. Early Thursday, the dollar-yen pair hit 133.10. It was trading in the bearish channel of 132.50 and 133.50. What's more, the yen appreciated amid upbeat domestic economic data. In Japan, machinery orders grew by 9.5% versus the forecast reading of 1.8%. In February, Japan's trade deficit narrowed significantly to 897.7 billion yen from 3,498. The country's economy is recovering, spurring demand for the yen. The Aussie also advanced amid domestic macro stats. The unemployment rate in Australia decreased to 3.5% from an 8-month high of 3.7%. Employment has grown for the first time in the last 3 months. The Australian labour market looks quite strong, signaling a low risk of a recession in the economy, at least for now. So the Aussie look the upper hand. On a Thursday morning, the AUD USD pair went up, breaking through the resistance level of 0.6660. It was moving in the bullish price corridor of 0.6609 and 0.6663. The New Zealand dollar, on the contrary, sank due to the negative economic reports. The annual GDP in the country slowed down. The economy expanded by only 2.2% in annual terms in the fourth quarter. The comparison in the previous quarter, this figure totaled 6.4%, and the Kiwi dollar pair was moving in the downward range of 0.6140 and 0.6192. It remains rather volatile. The pair also made an attempt to consolidate at 0.6170. And that's all for now. The Asian session is over. However, there are other ahead. This is why it's crucial that you have the latest news at your fingertips. With our video review, you will always be aware of market developments. See you soon.